So go ahead, Jonas, and
Thank
we'll
you
have
very
some questions afterwards.
Clarifying question. Do we do this in English?
English, please.
All right. Okay. Surprise. All right. Good morning, everyone. I'm the CEO of Proact since a little bit more than a year back. So I'll give you an update on the company. I'll give you a little bit, maybe a little bit too much, frankly, a picture of where the market is going, because it's important for all of us to understand which market are we playing in and what happens in our market. And then we made an acquisition not too long ago. Just want to give all of you an update on that acquisition, why we did it, and a little bit of the numbers behind it, and then some numbers, and then we'll wrap it up. And I'm ordered to do this in 20 minutes, which means I'll speak relatively quickly. We're celebrating our 25-year anniversary this year. So Proact was founded in 1994. We deliver technology or IT infrastructure solutions to big companies into their data centers or in what we call hybrid cloud solutions. So this means basic storage solutions where companies store huge amounts of data, server solutions so they can do large computing or networking. So it's the fundamental building blocks of an IT infrastructure is what we deliver. We're turning over around 3.6 billion Swedish kronor, including then the acquisition we did here recently. We're now over 1,000 employees in practically 14 countries around Europe. We're based here in Stockholm, and we run our business in a number of business units, and we have what we call 4 delivery hubs, and this is an important part of our strategy going forward to make sure that we build our skills and competences around service delivery, and we'll speak a little bit about the service component, as it's such an important part of our strategy that we're centralizing and really building that strength around being able to deliver professional service levels out of 4 of those 14 countries. Customer-wise, we're incredibly proud of our customer base. It's a strong number of logos on this slide, typically larger customers, in particular in Sweden. Most of all the large companies are using Proact for the data or the IT infrastructure, but also across Europe. All different industries are represented. We're not dependent on a particular industry. The loyalty with our customers is very high. I met a number of customers last week. They've been with us for 15, 20 years and are surprisingly happy. And I don't mean, excuse me, surprising because I don't believe we're doing a good job. But since I'm relatively new, it's always a great surprise to come in and meet customers that are very, very happy with the service we deliver to them. And I really pressure them on what can we do better. And sometimes they don't find anything, which is obviously something that makes me extra proud that our customers are so happy. All right, market. Definitely a shift continues to go on, of course, in the IT industry. It's always been a fast-moving industry. The key things we see now is the increased pressure on the IT to deliver business value. It's not just a cost center anymore. It's not just something basic, you understand. It's really part of developing our customers' businesses. They're delivering new business models, new services, new products for our customers. The focus on innovation is definitely increasing. The expectations from the business in terms of the return of investment is increasing. And maybe the interesting part for us is a very significant portion of decisions around IT and spending on IT is coming from outside of the IT department. So the buying patterns within our customers are changing. That means that it's a different type of person, a different type of profile who's now making decisions on which platforms do we need for Internet of Things. So what platforms do we need to be able to crunch huge amounts of data to do analytics on all the information we have, or even artificial intelligence and machine learning use cases on all the data we have. So it broadens the number of buying centers and the people that we engage within our customers. And it also broadens the use cases for us to make sure that the IT infrastructure can deliver on. And this is important to understand because running, for instance, a traditional finance system on an IT infrastructure has completely different requirements than if you're going to do analytics on huge amounts of data. So typically you would have slower access, focus on maybe on security and reliability on the data in a finance systems. And if you do artificial intelligence, you're going to run on dedicated processors, tailor-made process for mathematical computing. You will be running data with high-speed access to the data. You may have a geographical distribution in a different way than you otherwise would have. So the requirements driven by the use cases coming from the business of a company is very different than we've seen in the past. And that also means that the spend is actually continue to increasing within this business. So that's important to us. So a typical CIO, the person who's in charge within our customers for their IT spend, their IT infrastructure, sees a lot of demands increasing and changing, the business value, the speed of change, how do you modernize your data center. I always use my previous employer, Telia, as a fancy example, or a close to heart example, I should say. The oldest data system or IT system from Telia is from 1967. The newest, they're running prototyping and innovation projects in an Amazon cloud, for instance, and they have everything in between. So managing that whole spread of technology and all the different data and all the different applications that runs across that is actually a non-trivial task for most large companies, actually, not just Telia, of course. Hybrid models is a terminology you're going to hear a lot about. So hybrid means that the customer have applications and data in all the different variants you can imagine. The old systems from 1967, dedicated application systems that they may build for a particular purpose, cloud architectures that they built internally in their own data centers, or putting things in the public cloud like the Amazon and the Microsoft clouds. And most customers will do all of those in some sort of combination. For most customers, this means that the world is actually becoming more complex, not more easy. And this is great for Proact because we're here to help our customers managing their applications and their infrastructure and the data across all those variants. And security, of course, becomes a continuously increasing requirement and demand, and cybersecurity in general is, of course, super important for us. A couple of things to be aware of, and I mentioned them already. What is then accelerating this behaviors and these demands within our customers? Cloud services, of course, that modern technology that enables more rapid deployment of applications, more rapid scaling up of processing power or storage capabilities. AI and machine learning. A lot of us may think that this is still science fiction, but there's a lot of clever things happening now. Whether that's truly artificial intelligence or if you're just making smart decisions based on all of your data, doesn't really matter. It's still a lot of companies are now doing a ton of work on analyzing all the data they have. And if I may use another example from Telia, Telia of course creates a ton of data and generates a lot of data from their networks, their mobile networks, for instance. Typically that data was used originally to manage the quality of the network. Are all the calls going through? Do we have enough capacity in our base stations? After a while, we realized that, hang on, we can see how all the mobiles are moving around Stockholm, for instance. If we anonymize that data, we can do traffic flow analysis. So suddenly the data, the same data, is used for a completely different purpose, and suddenly it has a business value that we didn't realize before. That happens in all our customers. So getting value out of the data is a very, very important driver for our customers. And then, as I mentioned, when we speak to our customers, and this is important to understand, a lot of people looking at Proact thinks, well, hang on, when Amazon and Microsoft are deploying cloud services, are you still relevant to your customers? Yes, indeed, we think we are. We know when we talk to our customer that most of them, like I mentioned already, won't go all in to the cloud. There are actually very, very few customers who will put everything in a public cloud. They will have that breadth of systems within their IT infrastructure that still needs to work, still needs to be managed, still need to be efficient. And again, that's where we think we can add a lot of value. All right, so the market we're playing in is definitely still growing, and we need to follow and make sure that we develop our portfolio. So that's one of our key strategic pillars, continuously evolve our portfolio of products and services so that we can capture that growth in the marketplace. The hybrid model, as I mentioned already, is the new normal. So our customers can combine the best of both worlds, dedicated systems, high-performing system, lower-cost systems internally, or rapid innovation and the scalability of cloud solutions. The agenda for our customers is becoming more complex, which means they need more help. Thus, the role of Proact is increasing. And again, we have a very, very strong role and position in our marketplace. We grew up as a storage company. 25 years ago, Our expertise and speciality was helping our customers with storage of data, management of information, getting value out of all that data. And this is exactly what's now driving that transformation that most of our customers are going through. How do we get the value out of our data? And then, as I mentioned, there are new decisions being made in new parts of our companies, and that's another growth opportunity for us to find those new use cases, excuse me, and new decision makers within our customers. So for us, we do a lot of innovation and product development. We are expanding our customer presence, finding on new buying centers. We are establishing ourselves as a hybrid cloud provider and what we call a trusted advisor. We can help our customers not only with services and solutions, but also consulting. And we are accelerating our growth through acquisitions. These are the 4 pillars of our strategy. So on that note, as I mentioned, we acquired a company here a little bit more than a month and a half ago in the Netherlands called Peopleware. Peopleware is a company of 200 employees. They have business in the Netherlands and Belgium. Very strong in the mid to enterprise segment in the market, which is the same segment we're playing in ourselves in the Dutch market. They're more focused on the client side, the user side of IT. So they spend a lot of time on modern workplace solutions, so giving the employees of the companies a high degree of productivity. Proact, as you know, coming in more from the infrastructure side. So putting these two together, we now have a very complete offering when we go into our customers. We can do everything in terms of outsourcing and management of the IT infrastructure, all the way up to having very high productive and modern workspaces for our customers, including deployment, adoption, and user support. There is a local survey company in the Netherlands called Detta, and this company here, Peopleware, has been scored #1 in terms of the outsourcing quality for a number of years. Proact happens to be #2, so now the #1 and #2 in terms of quality have been merged. And we do hope that 1 + 2 doesn't make us #3, but rather go back to #1. They're very strong on Microsoft. Microsoft, as most of you know, has done a fantastic job for many, many years, but maybe even more so recently in terms of establishing their office and their what's called their Azure propositions, their cloud proposition within the enterprise, and they are the dominant player now in the deployment of cloud and productivity solutions with most enterprises. So the plan here is now to integrate Peopleware into our operations in the Netherlands and Belgium. We want this to be one Proact branded company. As I mentioned already, very complementary in terms of our businesses, very complementary in the way we do, or similar, I should say, in the way we do our business. So we think there will be a pretty straightforward and simple integration of getting this together. A very fine cultural fit. We behave very much in the same way. We make decisions. We meet our customers in very much the same way. And on top of that, of course, good complement with our customers. We think we can do a lot of cross and upselling on these customers. So that's great. We paid 17 million euros for this company. They have a turnover about 28 million euros, about a little bit more than 300 million Swedish kronor. A very high mix of recurring revenues. A little bit, roughly half of their revenues is under contract. And close to 90% is actually services revenue, so they have a very high degree of a services portfolio. For those of you who follow Proact know that we're roughly at 60-30 in terms of our mix. So 60% is from product and systems sales, and 30% is from, or 35 from services. These Peopleware have a higher degree of services, and profitability on an EBITDA level of 7%. All right, shifting a little bit to an interesting customer case story, which is very recent. Örebro Universitet is one of the universities that are part of a EU program in terms of research around artificial intelligence, and they just made a decision to upgrade their infrastructure, or build a new infrastructure to drive that AI research that they're doing in the university. This is partly funded by EU. And the interesting thing here with this use case is actually representative for 2 of the things I've already mentioned. One, the requirements that these new use cases put on the IT infrastructure. So this is now built on computing solutions that are not using normal processors that we would have in a laptop like this. These are using highly specialized graphics processors that are tuned to do very, very large amounts of mathematical computations. So it's a different type of infrastructure that enables them to do exactly those use cases they want around artificial intelligence. But it's also funded by the research money, not their IT budget. It was one of those cases where we engaged with the researchers and the actual business, if I may use that word, of Örebro University to get this solution to be decided and deployed within the university. So it's a great example of how when we engage with our customers on the business side of their thing or their operation side of things rather than IT, how we can deliver a better and more dedicated solution to them. All right, Q3 seems like far away, but I'll just give you a quick update on the latest quarterly report we did here after the Q3 of this year, calendar year. A little bit of revenue decline because it's been a bit of a volatile market for us. The cloud services, however, so the contract value of our own cloud service offerings is continued to be good in terms of bookings, so 87 million of bookings of new cloud services. That's a pretty good and strong number. The cloud revenues, so our own cloud services, is growing by 15% year over year, also very strong growth. And then, like I mentioned, the acceleration of our revenue growth through the acquisition added another 280 or 300 million or so on a yearly basis of our revenue, which I think is something that we've talked about for a while in terms of our strategy, that acquisition to grow is now happening in reality as well. If we look at the rolling 12 months number, this is excluding the acquisition. This is again after Q3 of this calendar year, 4% organic growth in terms of revenue on the rolling 12 months. We're a little bit over 3.3 billion Swedish kronor with growth in both the services and our systems business. But you can see that we're struggling a little bit with our EBITDA level, partly because of pressure on the gross margins, but also we've had a bit of a decline in some of our consulting services in the second quarter. And then we updated practically exactly a year ago now our financial goals for the company. We said that we're going to grow by at least 10% on a yearly basis in terms of revenue. About half of that on average should be organic and the other half through acquisitions. We're okay on track with that with this acquisition we now did in the Netherlands. We want to reach an EBITDA profit margin of 8%. We have some ways to go there still. As you saw in the previous numbers, we're currently then at 5.2 on a rolling 12 months. And then we have a couple of more financial targets in terms of our debt level and our return of capital employed, which debt in particular is in good shape and maybe have a little bit more work to do on the capital employed. But we're still tracking and we still believe in these numbers, so we're committed to deliver on these numbers through the strategies that we've talked about. So in summary, very well positioned in a market that we believe is growing. We are a data center and a hybrid cloud specialist. This is at the core of the transformation that most of our customers are going through. It's exactly what they need to have in place to make their transformations. We are now strengthening our business in the Netherlands and accelerating our growth through the acquisition. And we believe in our financial targets.
Excellent.
Thanks.
Right on time, Jonas.
Of course.
Perfect. So we go ahead with a few questions. First one on acquisitions. You acquired Peopleware recently, service company.
Yep.
Before that, you acquired T-Mix in Germany in 2017, more of a product-related company.
Correct.
What should we expect in the future in terms of mix and geography, basically?
So geography, if I start with that question, so we think we need to do acquisitions on a more regular basis, and we've geared up internally, both financially to have the ammunition to do it, but also in terms of having experts in place and the process in place to do it. So the Peopleware acquisition is a good proof that we can now execute. Geographically, we will continue to focus on our existing markets with Germany, UK, and the Nordics as priority right now. Netherlands continue to be interesting, but we're going to make the Peopleware integration first and make sure that we deliver on that business case. So we'll continue focus on our main and big markets. Our market share in Germany is still relatively low. Our market share in the UK is relatively low, so there's plenty to do in those existing markets already. In terms of profile, you'll see more of companies similar to Peopleware, where the services is a core part. We want the acquisition to help us with two things. We want to accelerate our growth, so they need to bring in revenue and a customer base, but we also want them to strengthen our portfolio and our skills. So using acquisitions to also accelerate not only the revenue, but our capabilities in similar to Peopleware. So more of services company in the cloud, networking and security space. That's where you will most likely see the acquisitions coming.
Okay. Looking at the financial targets, you have a margin target of 8%.
Yep.
You're currently around 4.5–5%. Will that be driven primarily by acquisitions of buying service companies, or can you reach that organically in the next 3 years?
No, we'll do a couple of things. We'll do three things to be specific. Acquisitions will definitely help us because if we focus on companies with a high degree of services, own services, they typically have a higher degree of profitability. Shifting our own organic portfolio with the revenue mix shift towards our own services. And when I say our own services, there's typically three of them. We do consulting, so helping our customers figure out what's the right architecture for them, how should they deploy their IT versus public cloud or internally, those kinds of consulting, or just implementation, training. We have support services, so make sure that their systems are all flashing green and working the way the customer expects. And then our own cloud services, so we manage and deliver services or IT infrastructure on a services basis to our customers. So a higher mix of those three service categories as part of the total revenue will increase our profits, and we have work to do to be more efficient internally. And that also goes for Peopleware. We typically spend most of our effort on growing our revenues. We have work to do to be more efficient and frankly more professional and quick in our service delivery. So those three things will help drive the margins.
Okay. A market question then. You have a relatively high share of sales coming from the UK, and how is that market developing related to the Brexit situation? What's the investment environment there, basically?
So Sweden continues to be our biggest market. UK is our second biggest market. Now, of course, with Netherlands breathing down the UK neck internally with the acquisition. And then Norway, Finland, Germany is roughly about the same size for us. UK market is, I think, continue to be a stable market. It's been a little bit less simple or a little bit more difficult in terms of engaging with customers due to Brexit, at least for one main reason, because there's some uncertainty in general, what happens politically, and there's definitely uncertainty in the public sector in terms of, okay, what are the investment levels going to be depending on the Brexit. But I think UK market is still going to be a good market for us. We're not too worried about it over the longer term, even though you may see some volatility quarter by quarter.
Okay. Looking at the Nordic market, which is obviously the largest for you,
yep.
We see some signs of a slower IT investment growth in 2020. We hear that from companies. We see that from Radar 2 weeks ago. How will that potentially impact you? And how will you address that type of slower growth market?
Well, we have a little bit of a hard time seeing that slow, and it may still be coming, and it's a difficult market to predict. But the good thing for us, and I'm not going to promise anything here, but typically, even in a downturn, IT tends to be a focus area, both in terms of driving that transformation, becoming more digital that most of our customers or all our customers are going through, but even in terms of getting efficiency out in times where you need to be more cost efficient, IT is key. And we are delivering the fundamental building blocks of IT for most of our customers. They can't stand without computing power. They can't stand without storage power. The volumes of data grows day by day. So we're playing in a relatively stable part of the IT industry. So we see the Nordic market as still being healthy.
Okay. I think that we stop there. We're pretty much on time, and we thank Jonas from
Thank you very much.
Proact.
Thanks for listening. Thank you.